Hey guys, how you doing? I'm Kent Tilley, and if you haven't watched the news or seen any headlines, obviously there's some stuff going on with some banks in the U.S. There has been just a failure of three banks in the last few days. So I'm going to talk today about kind of what happened, especially with the main one, which is Silicon Valley Bank, how that happened, why that sort of happened, and then sort of discuss something that I guess anybody watching my channel might worry about, which is, is that a concern in Canada? What happens to my money if that same thing happened to a bank in Canada? And so we'll sort of talk about the differences between the banking systems and how they worked. Obviously, I have some knowledge on this. I may get the odd thing wrong, of course, but I'll try my best to kind of explain it in simple terms, just to talk about, would this potentially happen in Canada for the same reasons? I think the answer is no. But that doesn't mean there isn't potential risk in Canada's banking system. I think there is different risks. So the Silicon Valley Bank had a bank run, which means, a lot of its customers all of a sudden went into the bank and started taking out their money because they got scared. And the reason why, because this bank catered to startups in the tech space, which had, generally quite a bit of money in their accounts, as we've all seen with the layoffs and things tightening up in the tech space. Obviously, a lot of these startups might be, needing their money. They might be not generating revenue, whatever's going on. They start hearing rumblings of things happening. The board of directors of this bank is taking out bonuses the day before this happened, which I think is just absolutely great. I think that's wonderful that they're allowed to do that and can get away with doing that when they know something bad is about to happen. So in these banks' cases, what they did is they'd get these deposits, and then the bank, what they want to do, every bank, what they want to do when you put money in is make money on your money. So generally in Canada's case, if you put money into a savings account or, a GIC or something, then they're allowed to lend out X amount of dollars based on how much money they have on their balance sheet. This allows them to lend more money. And so that's how the majority of Canadian banks make their money. And in this bank's case, the way that they wanted to keep their money safe is they went out and they bought short-term bonds, basically, that may have been paying, say, 2%. And Silicon Valley Bank had about $209 billion in assets. And they went out and they bought bonds at 2%. And as the United States started increasing the prices or the interest rates, the value of those bonds that Silicon Valley Bank had bought had dropped down. So if you watch my video on bonds and how that works, so nobody wants to buy a 2% bond anymore, because now you could go out and buy one at, say, 4 or 5%. So they have to sell them at a discount. And while everybody's taking their money out, now they have to go and actually sell these at a loss, just so they have enough cash on hand so they can, pay out their customers asking for withdrawals of their cash. And this started happening, and it happens very fast when this happens. All these people are taking money, they're losing money, their balance sheet looks absolutely horrendous. The government in the state's case, in this bank's case, stepped in and shut the bank down. And I had just watched a video today from a politician in the U.S. that says what they're doing in this case. So all of those account holders in the United States that have accounts in that bank in particular have protection up to $250,000 in insurance protection on their money. However, a lot of these people had a lot more money than that in their corporate accounts, because they're small business accounts that might have a lot more money in there. They need that for working capital. And so all of Congress got together the other night on Zoom, I guess, and had this big Zoom meeting where they said, we are not going to make taxpayers pay for this, because that's what they did in '08. We're not going to bail this bank out, but we are going to make every single one of these customers whole, which I think is the right answer in this case. I mean, I don't think bailing out a bank that took on risk in a capitalist society is the right answer, because you're saying, well, okay, we're going to bail you out because you failed. No, we're going to protect, the citizens and not the company because they failed. So Congress has said that they're going to pay back all of these customers with money that all of the banks have to put into basically a pool for something like this if this happens. So as far as I know, that's how they're trying to stop this from spreading like it did in '08. Is that going to work? Who knows, right? I mean, there are a whole number of different factors going on in the economy in the States, in Canada, worldwide. Inflation's running rampant, supply chain issues, war, all of these other things. All of these things do not really look good for the short term. How are we going to fix them? That's the question I think more people should be asking, rather than blaming everybody for problems that's going on right now. We should actually be talking about constructive ways, which I think there's some easy constructive ways to do this, but that's beside the point. So that's kind of what happened in the US. That's what I know so far is going on with that. Now let's talk about Canada. That's not how they lend money out. We have stricter regulations. Basically, I got asked a question by somebody yesterday, like, well, what happens if this happens in Canada? I said, well, we basically have 5 or 6 banks in Canada that are all one bank. So, if one bank fails, I don't know, we all own the bank, right? At the end of the day in Canada, in my opinion, they're one giant bank. If they failed, that means they screwed over every single Canadian citizen for profits, and maybe we should talk to our politicians about rectifying it and not helping out the top 1,000 shareholders. That's my personal opinion in that case. However, banks in Canada do have stronger regulations as far as things like that, and we do have more extensive insurance coverage on our accounts, sort of. So the first type of protection you have is, and I'll just share the screen here, so is CDIC, which is the Canadian Deposit Insurance Corporation. This is covering cash accounts, GIC accounts. It's going to cover up to $100,000 per account in any institution. Basically, if you're a bank in Canada, you are one of these institutions that has this CDIC coverage. So then you can see down here in this pink list they have how to maximize your coverage. This is pretty ridiculous, but you could have $100,000 in your name alone. You and a joint partner can have $100,000. You have $100,000 in cash. This is cash or a GIC. In savings, in a trust, each beneficiary, so each one of those accounts get $100,000. A TFSA can have $100,000 in coverage. If it's just cash, I think this is ridiculous, and we'll talk about why you shouldn't worry about that next. Your RSP, your RIF, so you've got one of each, an RESP, and an RDSP. So you could have a whole bunch, 8 accounts, or 100 if you have a whole bunch of trust accounts. You could also have, $100,000 in each bank, and then that would be covered as well. So, I mean, that seems a little bit easier. So that's where the protection is on each account. If you have over $100,000 in cash, in an account, in a bank, and something happens, you're only covered up to that amount. But as you can see here, what's not covered? So mutual funds, stocks and bonds, exchange traded funds, and they added cryptocurrencies to this. As you well know, cryptocurrencies aren't protected in any way, shape, or form through regulators. With the Sam Bankman-Fried disaster with FTX and losing all that money. There's also that big crypto weird guy that died in India. That was that Canadian company or whatever. That I listened to a podcast on it anyway, and hundreds of millions of dollars are lost because nobody has a key or something like that. So obviously crypto isn't even really part of this coverage, so I'm not sure why it's on there. So mutual funds, ETFs, and stock accounts are covered up to $1 million per account. This is covered by the Canadian Investors Protection Fund. So if you think about this, you can have up to $3 million in coverage on your investment accounts by having $1 million in cash, like non-registered accounts, plus a TFSA, and then $1 million in RSP assets, and then $1 million in RESP assets. I'm not sure how anybody would get $1 million in RESP assets, but unless you have 10 kids or something like that. But apparently they protect $1 million in RESP assets with the CIPF. So that's the coverage we have in Canada. Obviously, the banks, that's scary. A lot of people, I was just sort of starting my career, not even in finance. I was still in engineering when the 2008 crisis hit. A lot of people are too young to remember that, and some people remember it like it was yesterday. So when we see a bank fail in the U.S., it is a cause for concern. I think there are some major changes personally that need to happen. This is why we are starting a different channel called Stand Up Economists, where Sean and Ryan and I film different things. We try and be funnier, and we try and talk about some of the issues that are out there and some ideas that we have that can maybe help. And then, at the end of the day, I know there are a whole lot of smart people out there that maybe we should start listening to a little bit more, rather than the people that are yelling and arguing, but actually listening to people that have constructive ideas. I mean, we know when I share my ideas, some of them are going to be bad. But it's not like I really want to hear negative comments from everybody. I am trying to help. This is why I started K4 in the first place, was because it was like more people need to learn about personal financial planning. And as I've gotten more into this career, COVID happened, the economy in the world is just not looking great. Well, maybe we should start talking about constructive ways that less people can be stressed out about money. And I think that takes a collective effort personally. So that's where I'm at. I hope, I don't know how to invest in this world right now. You could guess and gamble and do all of these things, but the main thing applies when we're talking about it is find your risk tolerance, protect yourself, so you have an emergency fund. Try and pay down that debt that you have. If something happens, you lose a job, whatever, do not take on more debt than you can afford to have. With investing, it is a long-term game. Even in, if 2008 or worse happens again, well, as you've seen, it does eventually correct itself and then some. So investing is a long-term strategy. Being diversified, having a good financial plan in place, all of these things are important. None of us can control what the market does. None of us can control what the economy does, but we can control the decisions that we make. So, that's the best you can do. So, and then the other thing that I like to tell people too about, worrying is, let's say this happened in, at the beginning of the pandemic in 2020, when there was the drop of, 30% in 3 weeks and everybody was losing their mind. I was losing my mind as well. But when I was talking to clients, I said, okay, well, you were in this position, 3 weeks ago, and the rest of Canada was in their position 3 weeks ago, and we all moved in the exact same direction. So every single person moved in the same direction. So you are still in the same position that you were before. Now your job is to make sure that instead of going below the position you were in, to make the right decision so that when things do change, that you're in a better position. That's the best way I can explain how to sort of function through all of this garbage and crap is, try and be better than you were entering. And I'm not talking about trying to get rich quick or things like that, or how to make easy money. That's not what I'm saying. I'm saying by just going slow and steady, it generally does win the race, or not win. It places well. So I'd rather more people place well and have less stress. I know we have a lot of stress, so this is just another thing that we have to worry about on top of the endless list of things that everybody is really worried about right now. So anyway, I know that went on longer than it needed to, but I have, a lot of things and opinions to say on a lot of what's going on in the world, and that's why I do want to start that other channel, and you'll start seeing clips sort of pop up, and if you want to follow it, soon we'll have a link in the comments, and hopefully you check it out, and if you like it, you can subscribe and comment and let us know what you think or what you want us to cover. Cheers. See you soon.